Alrighty, everybody. Good evening. Sorry about that. My new microphone has been the plight of my existence here lately, so my apologies. But good evening, everybody. I am posting this link all around, letting everyone know I am live. Oops, if I can get the right tag there. Perfect. Interesting. All right. So we're going to go ahead and, as per usual, we're going to go over the news. We're going to go over our watch list. We're going to go over earnings, economic data, all that other good stuff. And then I will, as always, take your requests. So if you have requests, please $ all caps, just that request alone. One per person. Thank you very much. All right. Flip that bad boy. Perfect. Yeah. Wires. Gross. Alrighty. So let's go ahead and get started, everybody. I hope you guys again had a wonderful Sunday, wonderful weekend in general. As we kind of move into the holiday season, hopefully you guys should be able to spend time with family, um, and not be stressing about trading too much. All right, so moving into this week, this is going to be a absolutely, and one of the reasons I say that is because we've had a pretty rough couple of weeks, not just obviously P&L, but just as far as direction, we haven't really gotten that. So right off the bat, guys, let's go over the headlines here. Or over the weekend here, and reflect on last week's losses. So S&P, we saw that down 3.37%. The Nasdaq 3.99%. The Russell 5.08%, and the Dow 2.77%. A couple headlines. Stocks had their worst week in a couple of months as bond yields started to rise. Traders are watching this line in the sand for clues regarding the market's next move. Global regulator warned of a S80 trillion upwards of $80 trillion blind spot for financial markets and global economy. Meanwhile, the U.S. SEC is responding to the recent FTX turmoil by requiring additional disclosures for public companies. November produce price index showed that inflation remains elevated, this time driven by rising food costs. Investors are watching continued job claims closely for signs of softening labor market. The metric hit a 10-month high, though data is generally volatile during this year regardless. iPhone maker Foxconn is struggling with Chinese lockdown measures. With that being said, some relief on that front may be coming as China takes steps toward easing. Earnings were packed this week with, relatively packed with Jewelers, Carvana, Express, Lee Auto, and a couple of big movers off of those. MMTLP has been trending, probably not for the right reasons. I'm just mentioning that as a warning, and that's about it. So, if you guys are here on TikTok with me, if you guys don't mind going nuts on your screen, tap your screen. It's very much appreciated. Um, let's see here. All right, I can see your guys' comments right here. If you guys don't mind, please tap your screen. Thank you very much. All right, so couple couple other things that are absolutely crucial going into this week, and I'm going to basically read off a couple of things from the Discord that I do, and this is just in preparation for the week ahead. But this is where right now, the people here on TikTok, not much, many of you, those of you here on YouTube. Um, Hold on one second. Let me check my audio before I keep going. Okay, perfect. So this is when we create a schedule, and I gave you guys an example of what that looks like. If you guys can't see that or haven't seen that, I did post it in the Discord. I will post a free, for those of you guys in the free part of the Discord, I will post a copy and pasted version of that so you can see it as well. But this is where we create the schedule ahead of us Let me go ahead and do this really quickly. I think, hold on 1 second. Yeah, so I have it on window capture. Let me move this to screen capture really quick. And then I want to show you guys. I'm just gonna, rather than just, obviously doing this, I can just um, make it a little bit easier and show you guys this. Hold on 1 second. These screenshots. Bearish. What's your setup? What do you mean? What is my setup? This is my setup. Those of you guys on YouTube, that is not too tiny, I hope. All right, so if I've gotten this correctly, which I believe I did. Yes, I did. So let's take a look. Here's the Discord right here. Okay, so sorry that took a little bit longer. These aren't scripted lives. I do these live for real. So got a killer desk. It is pretty killer. It goes up and down, which is cool. So anyway, here are some economic factors, right? This is everything. And again, if you guys are in the Discord, you can screenshot this if you're not. But these are the economic factors going into this week, and these are going to be the priorities that we should be focusing on. And this is how I've created my schedule. So that being said, let's take a peek right here. This is the economic data for this week. So while I cover that, I'm going to show you my schedule and how I've based my my thoughts on trading, or my thoughts on approaching the market each day based off of the climate that we're currently in. So we have Monday, nothing much, right? We've got Tuesday, CPI, core CPI, big data coming in, pretty much all before the market opens. Now, Monday, you see right here, no real data, but with CPI and FOMC looming, we may stay in range. Wait till 10 a.m. for day trades. That's in order to pick direction. If you are a day trader like myself, we are looking, and we're going to go over the Tesla trade briefly while we do analysis on it. If you guys are on TikTok here, is Raider Trader a scammer? I don't believe him. I'll tell you that. I'll break off just real quick, but I don't believe him. I believe that he's just a kid who's learning, and then he's really excited about like all he just told me everything like to in the beginning of his career. He just told me everything about him, and then like what he represents now is not an accurate picture. So anyway, moving forward, so we've got a schedule based on this data. No real data with CPI looming. Wait till 10 a.m. And that again, we'll cover that with Tesla. But Tuesday, if CPI comes well under or over projection, we could expect some volatility with a few quick day trades. No longer expiration contracts, 15-minute candle close before full position sizing. Right there. So Monday, we'll wait till 10. If 10 shows no direction, we shall move on. Wednesday, right? FOMC begins at 2 p.m. So no trades before then, right? Because we just, why? Why would we? If there is the opportunity, if you see the trade, take the trade. If you abide by your stop loss. If you're not somebody who abides by stop losses and does what you're supposed to, and when those triggers hit, then obviously don't. But that being said, after 2 a.m., playing the inverse of the initial FOMC reaction has a 90% accuracy rate. That is just observable across the market. Then Thursdays, this candle open will determine a lot for me, right? This is where I'd be looking to take a directional trade with a longer expiration for a potential trend swing trade, looking for a clean open and directional trading. Friday, don't be surprised if we get our biggest move on Friday or chop like crazy implementing max pain. Now, I hate doing that because it's like, but you can also just cleanly trend and not have a big move. My thoughts is they either keep us in range and then we gap down or see direction going into next week. So anyway, that's basically it. And I've posted all of my charts. I'll finish posting those before the night's end. So make sure you guys go and leave a reaction there so that I know that you've seen it. Who is the guy in his profile? That is Jim Cramer. CPI is on Tuesday. So again, if you haven't seen it, here's Forex Factory. That's the website. It's posted in the Discord. These are the economic data. This is my schedule. So I'm letting you guys know right now. Wednesday, no live. I might go live early in the day just to chop it up. But as far as trading, expect me to not. And this is now a I'm going to be implementing this from now on in the Discord. You guys will know whether or not I'm going to be trading that day based on the economic data. Now, I'll always approach the market with an open mind, but I typically am pretty good at me and Ellie are pretty good at predicting a chop and whether or not we need to be involved in the market or not. So, if you guys have any requests, please, by all means, hit the link in the bio, hop on YouTube. I do have a request, though. If you guys are on TikTok, all the analysis that I'm posting, all of this stuff, because I've gone over not just the economic data, but I've also gone over some of the things that we need to do moving forward into this week. It has been a rough trading week. I've seen that across the market. So this is kind of a good pit stop as far as what we need to be doing or to prepare ourselves. Such as stop making excuses for why you're moving your stop loss, or changing your plan. If you have to write it down, set multiple alerts at your stop loss. You must do what it takes for you. I can only guide you in this, but you have to find what works for you. So things like that, and you can move down that list chronologically. So anyway, so let's go ahead and let's get to the thick of it. So the watch list this week is going to be relatively tight. We're keeping it down to 3, but we're going to make sure that we stay in the game by adding an ETF. So Nvidia and Tesla, and we're going to start this week as well. And I posted this in the Discord. We're going to start on the weekly because this is really where things get shifty, right? So right now we've already tested this green zone above us, right? We've departed the red zone below us. We are currently in no man's land. We do have a floor beneath us at 151 and 150, right? Psychological number. And that would lead us down to the 145 area. But this red zone is where stocks are, where Nvidia falls. And until it gets there, nothing is definitive because you could pull off an immaculate, right? Hold on one second. You could pull off an immaculate inverse head and shoulders. I don't really have anything to make a shoulder here, but as you guys can see, right, we've got the shoulder there. You've got the typical head mark here. Now, right, these things typically happen in downtrends, so they're favorable, but this isn't enough data to confirm that. So we rely on the confluence, right? If you guys are on YouTube and Discord, you guys know I talk about this all the time. The confluence here was right there. And that's where we saw trend and a key level and psychological level all intersect at once. And that's exactly what I look for when we're picking our targets. Nvidia was a banger last week. If you guys, we literally, Tesla and Nvidia, you know, I'm not one to brag about like calling the top and the bottom because those don't matter to me. But it just happened to be in line with what the hell I was doing anyway. So, but anyway, Nvidia is currently still in zone. Still in range, so a move next week I feel is imminent. It's gonna happen. Anyway, so moving down, we're gonna go ahead and look at the daily, and I will post tomorrow is really when things get important. But as you guys can see, lower time frame bear flag, so you guys can see that downtrend right there, and this is particularly a bearish setup, right? From there to there, you see the rejections off of that top resistance. You guys can see that what sellers did, right? We talk about these zones, but there's a purpose behind these zones. And that's essentially what I'm trying to show people when I am using these as examples. So that being said, right? Sellers control the mark of 171 and really 170.65, right? And on Friday, we closed after making a strong move off of support, and it pushed all the way up to 175.66. Excellent price target, excellent psychological number. And we got hit with a gnarly rejection, and sellers were able to reclaim control by pulling that stock underneath 171.60 and closing it at 169.40. So the zone that you see right here, Okay, that's the no square. We don't want to really touch Nvidia in here. Below 163, these are marking potential entries. I personally like 166 or 165 15-minute candle close minimum. Okay. Now I know a lot of people ask me, what the fuck, or excuse me, what the hell do you mean by a candle close, right? Well, the initial move is typically a liquidity hunt. Where the candle closes is where control is at. And if that moves out of a point of control, sound like fucking Ernie just now, out of, I can't repeat it, but out of control, right? That is representative of sellers or buyers not being able to, or well, in this case, sellers not being able to do their job. But in this case, sellers did their job, and therefore we would be looking for a range bound Nvidia, maybe a little bit of volatility on Monday. I don't see Nvidia moving anywhere past 78 or 178, and that's the resistance that I have for it currently. But anywhere below 165.85, 15-minute candle close would be indicative of at least a move down to the 157 area. Um, let's see. What do I think of Momo? I don't know that. I'm gonna gamble on short Fed on Fed short. Dip and rip. I'm gonna beat you up. Am I allowed to say that on TikTok? You know what I mean? Messed up my phone. There you go. Don't do that, Jimmy. Don't worry. Your mom charted those last night. I'm sorry. uh, anyway, so this is going to be a fun week. I am excited for this week. And one of the reasons that I posted and said what I said in my Discord is because I don't want you guys, you know what? Fuck it. I'm just going to go ahead and read them really quickly after I get done with this Nvidia analysis. Then we'll move into Tesla. Then we'll go ahead and move into the queues and I'll take your requests. So if you guys are just waiting for the request part, come back in like 15 minutes. I should be done with the boring stuff. But those of you guys who are trying to do this for yourself and want to see somebody prepping, here's your example. So, for NVIDIA, downside right there. Let's take a look at the hourly really quickly. Again, as you guys can see, floor is currently, oh, come here, you little shit. So check that out, right? And then we're going to pull this down just a tad, right there. So we see that we closed right back underneath that 170 ceiling. Now you have a little bit of um, struggle, as you can see, a rising wedge moving up into the 172. Then you pull back. But this is a definitive resistance and psychological number. So 170 lower time frame. You can also see a floor at 164. Excuse me, 165. So pretty solid there. Median here is 167.50, and that could be a good entry to the downside depending on where we open. That would need to be broken in order to pull back. But again, this is a very bearish setup for Nvidia, so I would be looking for Nvidia to move back down into the 160s, and that's about it. All right, so moving into Tesla. The link in my bio for Disco. Crypto will continue to do down. I'm staying away from crypto. I'll talk about Cosmos a little bit here in a second. How to sell a covered call? Um, we'll go over that in just a minute. I don't want to break into a whole explanation on covered calls while I'm doing analysis, or DM me on the Discord and I'll send you a whole thing on it if you would like for me to do that. That way you get a thorough explanation. I don't really like giving people half-assed explanations. So, alrighty, let's take a look at our best friend, TSLA, Tiesto. I don't know why I do that. The floor, it was 180, and guess where Tesla just so are 180, 179. But truthfully, it's been currently the 178.50 and 179 area, and we did hold that. Now that is below the previous support of 180. But in range, right? So even if this is confusing for you, this is currently Tesla's range, and that's from 190 to 170. Basically, this 170, 180, or 178, 85, 180, or 170 mark. Jesus Christ. Um, so that being said, looking at Tesla this week, we are still in range, and more than likely, we are opening up another inside candle. Now, let me remind you, Tesla will do this forever. So if you are looking for an immediate move out of Tesla, you might not get it. And we'll go down to the lower time frame. I'll show you what I'm working with on that. But right now, this candle is set to open up inside. And so what would be required is an open below 175.60 or at least 176.50. Somewhere in that range, we would have to open a candle and push down. But for me, I'd like to either open up somewhere in these wicks. That would be definitive of continuation of the downside. So like I said, if you guys have saw my plan in the Discord, I've already said that my directional trades for longer expiration contracts don't happen until Thursday, possibly even Friday. In your premium Discord, do you put your exact trades as you take them so we can take those trades as well? So, yes, I do. You keep moving away from the mic. I'm sorry. I can't help it. There you go. So, uh, I could barely hear you. Interesting. I think I have it set up now, but yeah. So anyway, yes, I do trade live in my Discord, so you can watch me trade live. Typically, any scalping or even quick day trading, I do not post in my Discord. I find it irresponsible. It is usually always going to give you a later fill. I'll give you guys the setups, the entries, and the exits on what I'm looking at and how I'm looking to size in. But overall, yeah, but overall, the point of our Discord is to aid people in creating something for themselves. So our focus, we do signal. Yes, we have scalpers who signal. Um, uh, Big Stepper's a scalper. That's all they do though. They're not on live and they're not managing anything else. So it's not as like you can just sit there and watch and then enter quickly. But so I know that's a long answer to a short question, but that's just kind of the facts there. So thanks for your time frame. Great informative data. Thank you, RC Investments. Are you looking to get any leaps? Yes, actually. Um, you need to go to the Discord and you need to just shoot me a DM, and if you really need help, and I'll help you get in there. So I try to withhold my thoughts on American Dream Trading Man, but here's one thing: he trades on a simulated count. You take losses; he does not. Okay, I don't think that's fair. Two, I thought we had a mutual understanding. I thought he was a decent dude. I don't think he's a bad person. I just don't like people who sell basic information. I think that's just fucking shitty. They get a hype around them, and then they use that hype to sell shitty products to clueless people who are not clueless because they're dumb, but clueless because they need direction. And getting into the stock market often leaves us with a feeling of being clueless. And people who sell courses are looking to take advantage of that. If you sell a course that you're a present in and teaching live, I could see something maybe, right? And even then, whatever. But if you're taking somebody, copy and pasting, then my opinion is that, which most of it is that you could probably just not do that. Yeah. Also, I'm gonna say this lastly because I know I get caught up on this shit. You guys are. You know what's funny is like you know the kid in class who you would like try and get him to ask the teacher a question about his life, and then the teacher would like just go off on a tangent. That's how this feels. But um, I think it's also if you're gonna show people you're a signal group or you're not. That is a fact, right? You are either selling signals and you should not be trying to teach people. It is not good to try and teach people who are taking signals. The point is to just take your fucking signals. But in my opinion, people they give people that education and just a sprinkle of it or just enough of it so that if they make mistakes, they can blame it on them, right? But the fact of the matter is signals do not work long term. So I want to work with people in my Discord who are already trying to do this for themselves, who aren't so intimidated by these people who because they got big computer setups and fancy cars that they're somehow on this upper echelon and like no, that's not how this works. If you got a lot of capital, you can make quick cash if you're not greedy. But anyway, uh, I need to join your Discord. Are you posting my? Yeah, I post everything in my Discord. So anyway, I'm gonna stop. Let's go ahead and focus in on what is more important because who cares what anybody else is doing? I was talking about Coach CWC. So anyway, here's Tesla on the daily. Very important. Very important. Why? Because we have been talking about the motherfucking inverse head and shoulders for quite some time now, talking about the potential on breaking up and out. Now, that's no guarantee, but I am banking on this reclamation of 183 and 185 for a move back up into 196, where I believe that on FOMC we could see a run into the 205 area. Maybe not. But there is a beautiful downtrend coming from the top here and moving down to hit a fucking. I'm sorry, but I get excited about setups like this. But to hit an absolutely incredible retest of 205 and 203.50, right? So that's what I'm going to be watching on Tesla is basically a open above 180. This mark right here, I would say that a potential add above 185. But that would give us clearance and room up to 195 and possibly to resistance. So when I take this call, if I take this call, when it hits the red line, that's when I take profit. I will trim if my entry is around 185. I will trim and sell my contracts to the people who are buying it at 196.80. So, and I will day trade up there, but um, how do you identify trading zones? So I actually give you guys for free because we don't charge for this shit for free in the educational part of our Discord. Links in the bio. I break down my quintessential setup, and we're actually going to go over Tesla right now. So if you guys are on TikTok, YouTube, I know that you guys probably want me to get to the request, but there's a lot of important information to cover, and I want to make sure that I get this to you guys so you can do whatever prep you need to do this weekend or tonight so that we can really, really start this week off well. Um, you can use both. So this guy right here said macro. He was talking about macroeconomics and TA, one or the other. Uh, yeah, that's not a thing, right? We look for confluences between TA and macroeconomic data, and that's how we pick frickin' perfect price targets. So no. If Tesla loses support below 171, I don't know if. Yes, I could consider a long at 167.28 if we get a reasonable bounce and reclaim of 175 again, but otherwise, no. That is Tesla. This is a inverse head and shoulders. So let's do. I don't actually hold on. I don't think that this chart does it. Yeah, you know what? That's the one thing that I'm learning about trend spiders. They're not as there's not as like a bunch of weird uh like for example, right? If I go to Trading View, which fuck it, I'll use both. I could care less, right? And I go to the daily and I zoom in, right? And I use we're gonna go to the 4 hour actually, and I use extended market data and then I take my chart and I invert it. Now, right? Now you see the potential head and shoulders type setup. Now you see a push above that, but oftentimes inverting your scale will make it a little bit clearer. And those of you who struggle with downside or playing inverse, invert your scale every once in a while. It'll clear things up for you. Don't leave it like that though. Once companies go more green, those companies won't. Yeah, TikTok bot, but that's going to take a long time. Do you find it fishy that BlackRock says there's a recession of epic proportions? Yes, of course I do. The link is in my bio for my Discord. All right. So now, if you guys want to get your notebooks out or whatever, or screen record, this is the best. Okay. Now, this is trend as of right now. Looking at Tesla, we did hit resistance. It looks like we're on our way to a open, possibly around 177 for what's actually going to end up being. And I know there's a lot going on this chart right now, but all of these are of somewhat importance as far as key levels are concerned. So if it's too noisy for you, just don't have that on your chart. And I could probably go with, well, not doing that. But anyway, so right now, inverse head and shoulders on the lower time frame would likely occur around 176.61. But in order to, again, break and move and hold to the upside, you guys can see I'm not making this up. This is you break up, you break out, you retest, you break out, you retest, right? Then finally make a new high. That all happens with a floor of 178.76 where you closed yesterday, and a ceiling above that floor at, you guessed it, 183 basically, right? We were 182.75, 183, but you can see that the ceiling in order to move higher is 183.85. So I'll mark out all these levels in the Discord. You typically want to avoid high open interest. This is Tesla. Okay, so my thoughts on this currently are anywhere below 176.45, day trade down to 172.76. Again, just pull the trigger. And now I'm going to move into a couple of the rules, so pay attention if you guys are here. If you guys are on TikTok, be sure to tap your screen. Helps me out a lot. Hopefully I'm helping you guys out a lot. So number one, we got to stop making excuses for why you're moving your stop loss, changing your plan. If you have to write it down, set multiple alerts at your stop loss. You must do what it takes for you. I can only guide you in this, but you have to find what is going to implement that discipline for you. What is going to be the reminder for you. Two, fear is why most people lose trades, miss entries. Robots don't have this problems. We can acknowledge the confluence between economic data, earnings season, and lack of sentiment in your analysis and entry. But if you have direction, take your trade. This is big. If you take your trade, you should have already planned out that trade. If you have not, get ready to feel all of those feelings I just described. That is just how it works. Why? Because your brain has nothing to fall back on, nothing to rely on in order to back up that information, right? And therefore you will feel fear. Technical analysis is a form of risk management. Now, if you are new, which I spelled that wrong, ain't nobody gonna say anything about that, huh? I just put a K in front of it. It might have been autocorrect. So if you're new, you are going to lose money. And you have to get over this. Losing causes most people to withdraw in fear that the trend will continue. If you have not been trading for more than 2 years, or more importantly, if you have never locked down a strategy, this will remain true for you. If you have made a plan prior to trading and it went wrong, you lost money. Hiding or trading in fear is removing your opportunity to strengthen your plan and strategy. In each loss is a lesson. Your reaction and headspace determines what will pull you from that. Like Rafiki said, the past may hurt, You either run from it or you learn from it. Just some things to think about going into next week. All right, so I'm gonna go ahead and look at QQQ for you guys, and then we're gonna go ahead and take a few requests. It's 9 o'clock. We're gonna run this up until about 9:30. So if you guys are hanging out with me here on TikTok, on YouTube, whatever it is, be sure to drop a like. Very much appreciated. All right, so a couple of things here. I have contradictions currently on both charts for the QQQ. Now, I'm not one to really dodge trend, right? I want to be accurate, and I don't want to move things around in order to fit my analysis, right? That's called confirmation bias, and that's not what we're here to do. But this is one of those interesting situations where uh, this, right, on the daily, this is why we use higher time frames. In order to find trend, right? I had to go and look at the weekly in order to, again, this is where we find some of our strongest levels. Why? If the weekly supports a level, for example, right here, 378.80. Why is that a key level? 1, 2, 3, 4, 5 weeks. You sit on top of that candle close. The first candle that closes underneath it, you guessed it, you make a new low. Um, so that's essentially why we use that as a higher time frame confirmation, and we look for um, a more consolidated data set on that weekly time frame. So always look left. I'm trying to keep up, you guys. I'm charting, reading this chat, reading that chat, and you this one. So my ADHD is I can handle it, but there's gonna be a delay. If you guys want to interact with me and not have your comments lost in the sauce, hit the link in the bio and go to YouTube. That is the only thing I can tell you, because that is where I'll see your comment and your request or whatever that may be. So on the weekly time frame for the QQQ, everything relies on 398.68 and obviously 300, but 390.68 is really where I see 1, 2, 3, 4, and then a major retest before making new highs. That is where the Qs must break above in order to take a upside directional tech-based trade. Do I make myself clear? No, I'm just kidding. So I'm going to create an alert, right? I want a little touch and then a breakthrough. So two different alerts, and we're going to go ahead and set this alert for about, we want to keep it within a dollar. We're going to go ahead and keep it about $1.50. Okay. Confirmation candles, right? You can use extended hours if you need, daily candles, add what you would like. But this, right, we're going to set a reminder in this alert, QQQ bullish. Now, this is set to go to my phone, so I get these text messages immediately. Long that shit. Okay. Create alert. Boom. Alert created. Now, that's in the back of my mind. I don't need to worry about it. Currently, the floor on QQQ on this weekly time frame is right here. This is 280, psychological number, 200, a moving average EMA on the daily below, or a candle open below 280 could be indicative of a move down. I have a mark of around 270, maybe 272, somewhere in that range. There's also a dynamic trend describing a potential bear flag here. But of course, I don't go with the patterns until they show confluence. So the only confluence I see here is at 270, but that is not going to hit, as I don't think anyway, as more than likely the Qs will bounce a little bit before that. I'm thinking I'm going to say 272 on a pullback for the Qs, period. Oh, dude, this song is such a jam, dude. It's Kermit the Frog. Someone educate me. What is he doing? I don't know. I was just making lines. Do you think it's pretty? No, I'm just kidding. We're doing a technical analysis on stocks, preparing for the week ahead of us. We got a big week with economic data and all that other stuff. So, puts under 280. I think a day trade may present itself. So let's blue skidoo our ass down to the daily, and let's go describe a more clear picture. So we're going to move the deviation channel out. So check it out, right? And I'm not a big fan of what's going on here, but I do see where control is at. Currently, control is 280. I've said it already like 3 times, but this is 280. And I have also mentioned that there's support on the Qs as far as on the lower time frame, or excuse me, not the support, the setup on the lower time frame is a little bit cleaner, but this is very, very bearish. What you have here on the Qs as far as last week is concerned is you have two major rejections off of 295.70. That's one, that's two. The floor here currently where sellers, their job is to make this go below 279. If they cannot do it, short covering, you're back up at 279 or at a median of 289. So that being said, below 279.72 or 75, I'm looking for a move down to this level right there. Okay? And that's it. That's 272.31, and that is a confluence. Okay? That's it. And that's all I have to offer on the Qs as far as the lower time frame. Before FOMC, listen, FOMC, I'll repeat it again, but my schedule, my trading schedule is out. Monday, no real data, but with CPI and FOMC looming, wait till 10 a.m. for directional day trades. Maybe a quick scalp if you're a scalper, but I am not. That is not my inherent first go-to thing to do. I typically don't, but I can if I want, but I don't. Tuesday, if CPI comes out, obviously we talked about big, under, over. We can look at no longer expirations, but some solid day trades, especially with that tension, right? We could see a pop in either direction, but mostly staying in range towards the end of the day. FOMC begins at 2 o'clock p.m. I will not be here. I will not even fucking touch my computer. I have the discipline to know from history and not go and stick my finger in the same outlet over and over again. If you make money tomorrow, by God, you're the best trader in the world. But I'm just kidding. But you, that's awesome. Good job. But what works for you may not work for me. And your strategy, if it takes advantage of whatever that has to offer, I typically don't care. If I miss out on the world's biggest green dingus, oh well, I will not be trading. See you later. So anyway, big bearishness here on the top. Sellers likely to step up. And really you have it. You have everything you need as far as where your targets need to go. We've got a tight range, which I see as the preparation for an explosive move going into the rest of December. So Cosm is, I don't think Cosm is done. No, I do not. Cosm is having a controlled sell-off rather than its typical momentous dump. This is having more of a controlled profit-taking pullback. It actually closed with a doji on Cosm. I would like to see a reclamation of $53, but mostly $70 is where this bad boy probably is going to take off again. Setting a little alert on the bad boy. All right, that is enough from me. If you guys have any requests here on Discord or on TikTok, be sure to drop those in the Discord channel. If you guys will just give me 1 solid minute of tapping your screen like a madman. If you're public, don't worry, no one's judging you. That's all I ask. So if you guys are on YouTube, it does help if you guys like the video below But otherwise, let's go ahead and let's break into it. So the first request that we got, and I'm gonna move through these, but around around 9:35, 9:40, we'll go ahead and wrap it up, and we'll meet tomorrow morning, bright and early. So, all right. So the first one that I see is Hood. I kind of forgot that this stock even existed, and it's at $9. That's not surprise. Let's go to the weekly. Yep, nice range bound flat. No one cares about it. Stock trade. You could see maybe a little bit of accumulation happening here, but this is your cage. And actually, we're gonna mark that. So this is the Hood cage, where you will more than likely be chopping for the rest of your life. That is going to be, yep, that is 1150 on the dot. Beautiful. We love that. And then we've got a solid floor here. Two bounces off of that. We love that. We're going to go pull up. Oh, we don't have extended hours. Never mind. And then here, that is $15. It's funny how that always works out like that, isn't it? It's almost like I know what I'm talking about. All right, so here we go. My diagnosis for a Hood, which is not good because this thing is sick. Downside, you need a candle and bearish continuation. I would go ahead and bank on 931. You do have a candle at all the way down at 7, but for me, solid support on the weekly is just basically at 775, 750, right in that range. The median here is 1150, simple as pie. So basically, this is probably where you're going to remain until Hood gets some sort of good news. But right now, they remain in the gutter and not a very good trading stock. Now, if you're looking at the lower time frame, here's your box that you're trading in now. You could use that to place a couple day trades, but that would require you to move down here again to the daily, where this, right? And the unfortunate thing about this is even as you move up to resistance, right? And look at this liquidity hunt. I mean, they absolutely demolished buyers. One, two, and on your third departure out, they sink it. And not only do they sink it hard. And then you've got a bear, what I would even call this potentially a symmetrical triangle. But the daily is descriptive of potentially a move down to 830 or just $8 flat. I would say $8 flat is probably a solid mark. And then watch 1050, and that's where I would be looking for that 1150 move. So Robinhood doesn't look too bad. Curious on your if you guys have any requests. All I ask, tap your screen, but jump onto the YouTube channel. The link is in the bio. Simple Stacks Investments. I'm live now. Subscribe to the channel if you have a YouTube, and then comment your ticker, and you can hop right back on TikTok. I do not care. Or you can watch this later on. But otherwise, it helps me if you guys show support for the YouTube channel. It's dope. And then obviously, I get to see your requests. So, all right. That's Hood. Let's go and take a look at BTU. Peabody Energy. Peabody. Peabody. Why does nobody name Peabody anymore? Yeah. I don't like that. I don't like that at all. But what I do like, and I'm gonna go down to the daily here because the weekly's so consolidated, and that's so choppy. So actually, we're gonna stay out there. So here's your floor. Your floor is 1050, or excuse me, 1950. 1950 is your floor. You got some wicks and some bounce levels all the way down to 1835. But that was if any candle closes on the weekly below that, definitively that is where I would be looking for continuation to the downside. Um, we'll go ahead and look on the lower time frame, but it appears that you did see a solid rejection off of that 32.85 high. It's about where you opened up and completely engulfed in this last session. So what I would be doing at this point is trying to find out where Peabody Energy would have to stay above in this range in order to determine whether or not it can hold its uptrend. And so what I'd be looking for here is the place where sellers previously kept Peabody Energy in check. And that's going to be, it's like majority of sellers reside here, right where you landed. And then with that being said, right, you've got a shorter term or shorter time frame resistance and support. So I see a confluence here, and that is 2650. So watch for 2650 on BTU, but for sure, watch for any candle close. I'm gonna say 25, but there is 25.78. This is, mind you, the daily. So this is thinking about not day trading, but more or less swing trading. And then as far as the hourly is concerned, looks like you get a spiffy little trend right here. Kind of, yeah. It may be that you've got more of a wedge forming than anything else, but we'll take a look at it. Okay, so that's kind of what we're looking at on BTU. So I would say that you're in a nice little tight range here, lower time frame or the hourly time frame. I'm gonna bank on this area being the area of struggle, but 2850, if you can reclaim, I'll be a little bit more conservative. 2870, I think 2870 is your journey back up to resistance at possibly 2975. Uh, that is also 2975 is also a resistance. So it's not just a guess. It's based on where you've rejected before, where sellers typically sell, and that is right there, actually closer to $30. So do you think Carvana is going up? I have no idea, dude. I'll be honest with you. Yeah. All right. Okay, so let's move forward. We got BTU, Disney, Disney. I'm craving coffee already. I think whatever happened with Carvana may be a squeeze, but people always milk that shit way too far and lose all their money. So I'm gonna not participate in that. All right, let's go ahead. Simplicity at its finest, currently below any area of resuscitation for Disney. That's money, dude. Put it on a cracker. All right, folks. Here you have it. Disney on the weekly. You did get a candle close on top of 91.25. That is where most candles have closed previously, with a resistance on lower time frames, not just here, but on lower time frames, basically marking out whether Disney can recover or bounce here or not. And that is going to be at $98, or we'll call it 98.50. That's going to be where I'd be looking for Disney to. Ouch. I have not done Amazon. You ever get those random head pains? Dude, stay away from MMLP, man. That shit looks fucking like they got Yeah, like they're gonna tear people to shreds on that bad boy. All right. So anyway, I this is kind of where the overall candle closes matter big time. So again, $91 is where each one of those bounces happen. If you get a candle close below $91, I'm not guaranteeing it, but I'm almost positive you will be down to $80. Period. Now that being said, we can move down to the hourly, and we can go into, or even really the 4 hour, and we can go find lower time frame trend, which is here, and we can go and find lower time frame trend here, and we can see that a potential descending triangle is potentially going to happen. And so you could see Disney reclaim or even pop right back up to 99.25. Um, oh, I just got a cramp in my jaw. Took me out for a second. My bad. Dang, I never had that happen. I don't know how a girl feels. Hold on one second. Let me read. All right, so let's take a look at AMD. I already have it charted. Bam, dude! I love it. I love it. Wow. So I haven't touched this analysis in I think a week. It's been since last Sunday, the Sunday before. I believe yeah, I believe that I told you guys that if you lost 72.17 that you're more than likely going to go back to 68.80 and that is exactly where you closed. If you open below that, expect Disney to $66. Okay, that is the first pit stop. Second pit stop, 60. Yeah, caught me by surprise. Right here. Expect the floor of 63.45 to the downside. Now let me go look at the daily. Yeah, so you are up against resistance. We've talked about this already once or twice. You are up against resistance. You did have a triple top, 3 rejections at 78.55 before pulling back. Now there is, right? There is this, and this is to be taken with a very small grain of salt. But if we can find the confluences in them, there is some truth to it. So right now, I see the potential for a symmetrical triangle. Now, I've been talking about definitive direction after FOMC. That doesn't have to happen on every stock, or we could potentially head into a very volatile end of year where we see a strong pullback and then they keep it sideways and in range. So I would be especially concerned about making sure that you close below 63. I'm going to call it just 63 even, but 63.35 is where I would want to make sure that you stay out of if you're bullish. But if you're bearish, you want that to go below 63.50. So AMD. I'm sorry. I know I said Disney. AMD. This is AMD. I a lot of charts in my brain. To buy AMD, I mean AMD can come down further. Believe that. Uh, look at that. Look at that clean trend, man. I believe AMD's next price target lies at 48.80, and then potentially $38. I think buying or DCAing AMD around $35, and I know you guys are probably like, "There's no way," but there's a way, and it will. And it rejected a retest right here at 75.40. That was essential. You rejected that. And so now you're on your way to 58.40. And then I think a new low, which is $50 basically. So dang, that was fast. What's up, bro? What's up, Stock Fiend? All right, so moving on, AMD. If you guys have any questions on any details on how I do anything after I'm done with these requests, I'll be happy to answer them on the Discord or tomorrow morning. Typically, this is a trend spider, but you're probably going to need to look up a channel tool on TradingView. Excuse me. Acer. Acer Therapeutics. So this is hot dog water. So first of all, but on the weekly, it does show one of these stupid little things. So I guess we'll give it its. Shit doesn't want to chart. Wow, that was kind of annoying. That is ridiculous, dude. They are destroying. Oh my god, what in the hell is going on here? Let me put my line down. What are you doing? Am I having a stroke right now? I'm craving toast, but I don't smell it. All right. So what it looks like, or appears to me, is that you just bounce off support, and this. What the fuck is happening here? Um, dude, this is such a wild chart. My computer's about to shut down. So first of all, I see a wedge. Typically, if this does continue higher, watch 530. But the first major sell wall above you, other than what you already are dealing with, is 288. So mark that down. And then 375. If you want that 5 cents. So that's my thoughts. And that's really all I have to offer because I don't trade this stuff. All right, so SPY by request, obviously 1, 2, 3, 4. That is on resistance standard deviation channel. We have a confluence at 370.50 with a third major tap of support and potentially that 200-day EMA. But more importantly, any move down here, this is going to take quite a while if it does, but any move down here would obviously be a target. That far away, you could probably, I wouldn't wait that long for a trigger. But currently, on this lower time frame, this box right here, all right, that box is going to basically be representative of potential pullback. Doesn't mean that you're going to be red indefinitely, but it does show a rejection and then pullback to that exact area, 390, 391.40. So I would reckon a bet, I'd reckon that underneath 390, you should expect a potential pullback to at a minimum 371, and the 200-day moving average here at 369.50. And that's potentially where you might. I'm not even going to call that. That's not an inverse head and shoulders. So, but really, that's it for SPY right now. At least on the weekly time frame. The daily time frame, clean. You got a wall here that is 402.30. You got a breakout. You hit your resistance on a higher time frame. You also tapped your bear flag resistance, which is this is all jacked up right now. And then Friday, you closed 1, 2, 3, 4, 5, 6, 7 candles all closing on top or just barely underneath. And that is exactly where you closed on Friday. So in order to determine direction, we need to see where we open up. We've got a giant gap right here. And we'll just go ahead and give it this right here. But a gap to 379.85. Is where a gap below us. So triggers to the downside for SPY, and then we'll be watching, of course. But triggers to the downside for SPY will lie, especially a candle close below this mark. And that's the, oops, there we go. That's 390, literally on the dot. This is bearish. This is bearish. Yes, and if you see the trade, take the trade. Yes, they could reverse it. If you're in a shorter expiration, it's probably not going to work out for you. If you have a longer expiration, you're going to have time. You could hedge, etc., etc. But I do use Fibonacci every once in a while. Sure. Yeah, most of the time, my levels and Fibonacci go hand in hand. If you guys notice here, we got a fib right here at 379.80. There's a fib right here, dead slap center at 400, but I don't need to put a mark at 400. That's pretty obvious. But yeah, I use auto fibs here and there. I made some money on your Tesla 215 call, my bruh. Awesome, man. I'm glad you made some money, dude. Hopefully you can keep building on that this week. We're looking to have a pretty good week, I think. I would look for my price target here is 380. That is a gap fill, and that is three. We got 390 here. That's an entry. 385.50, dude. This is ridiculous. This is straight up just math. I mean, look at that. Look at that. That is stupid. I love it. I think yeah. A pal is going to move the market. Powell will move the market. And without him, or the time running up into him, whoa, hold on, pause. We're just, you guys are not gonna say anything. I'm gonna keep it moving. All right, that didn't happen. But moving into the event where he is featured, that is where I believe we will see some serious volatility. Now, follow through, I can't comment on that until we see levels triggered. But we can get into position, right? How's it going? I am 31 and 99. Do you think the Fed's come in dovish or hawkish? You know what? I think that they always tend to keep their tone. You know what? It's probably not even worth commenting on, but I personally think they still come in with a hawkish, um, thing, a hawkish. Sorry, I got ADHD and I'm reading things and trying to read or trying to say things. But yes, I think it's hawkish commentary here. Interest rates. Have $1,000 account. Don't know how to maintain it. Some days up 200, some days down 300 the next. Do you have a plan whenever you get into your trade? Typically, do you have a like a well set out or even a plan that you could write down and describe to somebody else? 30% and I'm out. I do execution and I'm out. So I don't do percentages. I think the 30% rule is heavily implemented by a lot of other discords, because it's safe for them, because you're not losing money but you're making money, but then also you're experiencing probably a great deal of FOMO, and then they're telling you to just deal with it. But what feels better is executing your trade based on the analysis. Now, that's me. That is my opinion, and not meant to influence you at all. But that's just my thoughts on your comment. Typically, not 30% for me. So, can you explain what you mean by execution and out? Typically, when I set a price target or I have a setup to trade, I find the triggers based on mechanical levels where money is at, right? Where sellers have put their money in order to keep that stock down, or buyers have put money in to keep that stock up, builds, etc., etc. Um, and then based on all of that information and the economic data ahead of me, I will find the correct expiration and strike price, and I will trade. I will take it at my entry, and it will be, I will take profit at the mark that I have already agreed on, as far as, because that's how I weigh risk to reward, is based on my target. Because if I have no target, how do I determine whether or not it's a profitable play in general, right? So that's kind of like one of the first things is, I need to place a target and then pick a contract that's going to allow me the time and lack of volatility and our lack of theta, in order to obviously allow me to profit. So, and typically that works out in my favor. So, y'all like bees because bees love stocks, flower stocks. I don't know. How do I decide on where to cut losses? So if you guys would go to the right now, I'm gonna finish up these requests. But if you guys will go to the Discord, I have an intermediate techniques. I have typed out exactly how I map those out. Exactly. So if you guys need any further explanation, I'd be happy to do that tomorrow, at some point during the day. So, but we will be live trading tomorrow morning. So I look forward to seeing you guys here. We are day trading. It's going to be a slow start to the week. So don't be on edge, but just take it as a nice, easy stroll into the week, where you're going to watch other people lose their ass, and you're going to be sitting waiting for the real money to start moving things around. So, all right. So, Cat, a lot of people short on this stock right now, as far as I can tell. So, with that being said, I'm going to actually move this down here, and I'm going to move this here. So, where you are at currently and where you might go, 225 is a benchmark. Now, underneath that, there is a lack of volume or a gap to 219.50. If that gap is filled, which filled and then surpassed, and a candle closed below 219.50, I think you pull back, and you pull back all the way down to 203, or maybe even just 200 before seeing your next bounce. I feel, man, I feel bearish for this Wednesday. But again, even how I feel doesn't matter. We're gonna make money. We have a pretty good strategy to take advantage of FOMC. So I do not use supply and demand indicators. No, I do use a form of supply and demand, but no, I do not. CAT is very overbought. Well, was overbought on the RSI, but has cooled down since to an area where it does like to bounce. So something to keep in mind. Make sure to tap your screen. You guys are crushing it. Yeah. Yes, it is. Baba. So I currently have a short on this thing. It's a bait. I put a gamble into it, but the motherfucker's red. You went and hit my median right there. That's 74.70. I'm craving ramen right now for some reason, but 94.30. Right now, I would expect that if you do get a candle open, not closed, but open above 90, I said 295, 94, 50 or 95, I would speculate a move to 98 and then ultimately 101. And that's just clean, you know leaving that trend clean. So I would also consider, and I've been watching this, that there is a possible, hold on one second, or there is possibly trend that is currently setting up, and I'll show you what that kind of looks like here at the moment. So a little bit like that. You kind of have like this awful looking uptrend here to the upside. So if Baba pulls back, either A, stays in range in this choppy 87.50, or you could see a strong gap fill to 88.17 and then pull back down to 82.50. And that would really be where you, I would expect, determine whether you bounce or continue the downside, filling that gap to 75, which would ultimately probably bring you down to new lows. So this is a trend spider. All right, folks. It is 9:45. I am going to go ahead and wrap it up. I got all the major ETFs. If you guys have any requests and I missed them, I will write them down or copy and paste these right now. And I'll leave them right here. You know what? That kind of sucks about Trend Spider 2. You can't paste anything on the chart, and I don't really like that. No, I don't like that one bit. But let's see here. I'll do this. All right, I just posted the YouTube chat in the chart request page. So if I have time, I'll chart those up. SQ and PayPal look a lot alike, but my throat's getting really dry, so I'm gonna go ahead and hop off. I could feel it right now. If I don't get some water, I'm gonna lose my esophagus. But you guys have a wonderful night. I'll see you guys tomorrow morning. I meet with my mentors at 7:30. When we get done, I typically go get my coffee, and then I come right back and I get ready to chart it up with you guys. So if you guys have any questions, comments, or concerns, if you have any concerns, I don't know what to tell you, but if you have anything else to offer or anything to throw out there, questions, stuff like that, let me know. But thank you guys for tuning in. I appreciate it very much. Peace. Liver King out. Who yo